I'm Julia Schiefer, the founder and editor of DerivSource.com. The securities financing industry is undergoing radical transformation in the current climate due to changing market conditions and new financial regulation. At the same time, innovation in both business practices and technology is paving the way for new opportunities for firms to improve the general running and processing of their securities lending and repo businesses. In this video today, we're talking about one of these new opportunities, managed services, and how people can use this approach to improve their securities lending and repo businesses. With me today, I have David Selwood, Vice President and Head of Securities Finance and Collateral at FIS. Welcome to the video, David.
Thank you very much.
So let's focus first on the securities finance industry at large. Can you paint a picture of really how the market looks today and the trends that are impacting it most significantly?
Sure. So I think really from my perspective, I think if I look at this from take a regional viewpoint, I think with Asia, we're really finding really access to new markets is really key there, and trying to bring that access to the fore. Quite exciting. Everything's very positive. For EMEA, very much regulation. It feels like it's been going on for quite a while now in terms of deciding what that regulation should look like, a format, delivery, a timeline. I think the good thing about that though is that it's finally coalescing into something which has those endpoints set. So the timelines are becoming clearer, and what's required within that regulation, the type of reporting that's needed is also being much more defined now, which is a good thing. And really, I think in the US, we're really seeing I guess the growth of sort of slightly smaller firms, new market participants, people coming out of other firms and really sort of delivering much more boutique type securities lending services and around the repo side as well. So I think that generally speaking, there's a lot of positivity around, but that's just my observation from what I can see.
Perfect, thank you. Talk to me a little bit about why firms would be driven to use a managed service approach for their securities finance business.
Sure. So I think really there's three key areas in that. Really, cost is obviously key. Resourcing and expertise is another one, and also sort of project delivery. They're looking at the short, medium, long-term goals that the business and really technology want to achieve from that. If we talk a little bit about cost, I guess one of the key phrases that I hear a lot and certainly use is around total cost of ownership, and really the understanding of what a service is going to cost over the term, for example, and the makeup of that service. Essentially, what are you paying for and what are you getting for that? If we look at resourcing and expertise, again, if you look at that across the term, and we talk a lot about, and I certainly do, around sort of service level agreements and ensuring that we achieve certain levels and achieve a certain level of service, and really having the expertise in place to be able to deliver that. And as a provider of services, really that becomes ultimately my problem to manage. And then again, if we come on to the project delivery side, certainly what I found and in the past is really firms stagnate with around applications. They may have an expert certainly for the delivery and the implementation of that. That expertise slowly drifts away. Other calls on that, all that expertise is time. Other projects, really within a managed environment, you're maintaining that focus and building that type of project delivery, that type of short, medium, long-term aim into that service is fundamental in my opinion.
It sounds like project delivery is particularly key for securities finance given the market conditions are changing so rapidly and, as you mentioned before, regulation.
Certainly, and I think what we find is that we have businesses in some cases who are frustrated because they can't get what they need to get done, be that internal projects or external projects. It's very much part of the same circle, if you like. But certainly, one of the key intentions within a managed service is to bring that forward. It's not just keeping it as is.
So David, you've highlighted the drivers behind a firm moving to a managed service approach for securities finance. Can you give me an example that's very specific to those who are working in securities lending and repo businesses who might be considering this move?
For example, you may have concentrated expertise around an application in a particular location. I guess if we then look at that and say, well, what benefit does moving to a managed service offer me around that? Well, in reality, fundamentally, the delivery of that expertise for you as a firm really becomes, in my case, becomes my problem. So you're wanting to expand into Asia, for example. You know, you have a couple of desk users who are really, really want to push volume in Singapore, let's say. The way that I view that is that again becomes an FIS delivery issue. So we have expertise in those regional locations. We have that product, that level of product delivery. And that level of managed service all wrapped up into the same engagement model.
So, David, for firms considering a managed service approach for securities financing, what are the challenges and benefits that they should anticipate?
So I think the main way to describe perhaps the challenges is around preparation, really understanding a firm's own needs. I think that's the greatest challenge, is that real viewpoint or that preparation that's required is key to the overall delivery. Certainly, really, it's having that partnership in place, having a clear set of deliveries within that, understanding what that is, even at a contractual level, and married to all the agreements that go with that in terms of what the service will look like, what the additional services are that are part of that. And really focusing on driving the business forward over a period of time, so however long that term may be, and really that's crucial. Having a partner who is prepared to not just remain static.
So really, for firms who really want to focus on their core businesses and have the scale, have the capability, have the expertise to allow them to expand or grow, that's where a managed service would really give them that kind of leg up to do those changes.
Absolutely. So really we're talking about maintaining a steady environment, a steady solution, a steady service that really a business allows them to then grow into their expertise, which is the business of the day-to-day, is the business of their core deliverables from their perspective.
Okay, great. Well, thank you for sharing your insight with us today, David. Really appreciate it.
Thank you very much. Thanks for having me.
Thank you for watching this DerivSource video. For more information on the services discussed today, please go to the FIS website. And if you want to learn more about this topic, you can go to DerivSource.com or subscribe to our YouTube channel for more interviews, both existing and in the future. Thank you for watching.